Good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, December 6th. Hey, sorry for the delay here, folks. Just had a really busy morning here, and it is Wednesday afternoon, so it's kind of later in the day here. But to be frank, not much has changed in the markets here. But before we get into the markets, we'll talk about the economic calendar. The news of the day is ADP employment. Again, news of the week will be jobs. So this is the first one we get. Tomorrow will be the jobless claims, or the weekly jobless claims, and then Friday will be the Bureau of Labor Statistics numbers for unemployment rate as well as jobs created, and that's the big one that carries the big weight. So according to the ADP on the private job sector, we had 235,000 new jobs created in the month of October. Now, November, it created 190,000, so it pretty much came in line with expectations, which is a good, solid number there. Uh, Also on the docket, we got the productivity for the third quarter. So again, these are things we get revisions here on the quarterly. So initially we had 3%. The forecast was supposed to go up to 3.3%, and it came in at 3%. So it pretty much came in line to the same, there was no change of productivity. Unit labor costs, as you see for the third quarter, we had a 0.5%. The forecast was supposed to dip down to 0.2%, and actually it dropped 0.2%. Instead of going up 0.2%, it went down 2%, 0.2%. So costs have come in there. Of course, a lot of this, is due to uh, automation. You're seeing a lot more automation out there, and which is lowering these costs. And this is part of the reason why we're seeing, inflation so low as well. Part of the reason, and why you're not seeing wage inflation going up there as well. Stock market is currently up. Again, not a lot going on out there. We got tech sector starting to take a little bit of a beating today. It's up a little bit, but it's taken a little bit because part of the one of the things they're looking at is the new tax plan coming in and talking about the corporate AMT. So House says they're trying to remove the corporate AMT, and the Senate bill comes in and it says they want to include this AMT. And this particular part of the corporate bill or the tax bill will affect primarily a lot of the high-tech companies out there on that. So that's why that sector's taking a little bit of a beating, and of course, energy is taking a little bit of a beating as well. But overall, the stock market is up for the day. Here's the bond market. We are up here too. We're down for the day, but we're up currently about 17 basis points. So we went from this range between 200-day and the 25-day moving average. So here's the 200-day right here. Here's the 25. Jumping past all that, the Fibonacci and the 50-day moving average, now we're up about 17 basis points, which translates to favorable prices. So we got better pricing here. Now, my concern will be because we had such a huge jump here that at some point we're going to fill in this gap here. This gap will fill in, and so we won't really know for the next few days if this will be a solid foundation. So just be a little bit leery, especially with jobs numbers coming on Friday, which could take money from us. But one of the things that could be potentially helping us is that I think we're starting to see a little bit more foreign investors coming into the market now with the bonds, primarily because we're getting the Brexit is starting to take place, and they're trying to get that in place. I think they were trying to, if I recall, they're trying to get that in place by March of 2018. But they're running, of course, into a lot of issues in their, simple things like you would think simple things to be like borders with Ireland, stuff like that. Whereas before a lot of that was, open. And now you're creating a lot of issues. So because of all that certainty, it's coming to a safe haven like our mortgage, or like our bond market here, which is our mortgage-backed securities, and this is kind of helping out interest rates a little bit, these geopolitical concerns. Here's the Treasury. Treasury dipped below the 50-day moving average and the 25, but it's coming down to the approaching the 200-day moving average, which is at the 230 level, and right now we're right about the 232, 231 level. Right now about 2.32 range. So we're just above that 200-day moving average. But we won't really see any significant rate improvements until we can break below this 200-day moving average, which has been very formidable, and it's been really hasn't gotten us in that range yet. So that pretty much wraps it up. So rates are better today, which is obviously great news. Just be cautious going into Friday with the jobs numbers coming out, as it could stock market could take off, and that could take away from interest rates. And like I mentioned, here we had this opening gap here, and most likely that could get filled in within the next couple of days here. Just again, be cautious there. All right, so that pretty much wraps things up. If you guys want to get more updates, well, more or less, the main one will probably come out later today. Will be the market close. But if you want to get any of those, just come over to Twitter. You can find me on my handle at Mike Bjork. I do post throughout the day, pretty much every day, or at least Monday through Friday on those on Twitter. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.